Today, we're embarking on a thrilling journey through the intricate web of numbers, policies, and trends that define the current economic landscape of the United States. Hold on to your seats, because we're about to uncover the raw truths, the hidden gems, and the pressing concerns that are shaping the financial destiny of millions. As we peer behind the curtains of Wall Street, Main Street, and every street in between, we'll navigate through a labyrinth of data points, revealing the highs, the lows, and the unpredictable twists that keep economists on the edge of their seats. Buckle up, because in this video, you'll discover 1. The national debt. 2. Taming the inflation beast. 3. Debt to GDP ratio and economic indicators. 4. Financial instruments. 5. Misconceptions and realities of national debt. Welcome to Live Economic News, your comprehensive guide to understanding the intricate dynamics of the United States economic landscape. Today, we embark on an extensive exploration of the current economic situation, shaping the nation's financial trajectory. But before we delve into the depths of this analysis, make sure to hit the like button, subscribe to our channel, and ring the notification bell to stay updated on all our latest economic insights. Are you ready? Let's dive in. Current economic situation of USA. The economic dynamics of any nation are akin to navigating a labyrinth of policies, trends, and global interactions. In the case of the United States, its economic scenario is influenced by a myriad of factors, each playing a pivotal role in shaping its financial course. Let's embark on a comprehensive journey through the key elements defining the current economic situation of the USA. Let's kick things off with the good news. The U.S. economy is experiencing growth. In the last quarter of 2023, the gross domestic product, GDP, which reflects the total value of goods and services produced, grew at an impressive annual rate of 3.3%. This is even better than initial market expectations. However, some economists caution against popping the champagne corks just yet. This strong growth follows an exceptional year in 2023, and it's unclear if this momentum can be sustained. Global factors like the war in Ukraine and persistent supply chain disruptions pose challenges. The national debt. At the forefront of the USA's economic discourse lies the towering behemoth known as the national debt. With figures soaring to nearly $33 trillion, this colossal debt burden encompasses both intragovernmental debt and obligations owed to external entities. While the notion of a debt-free economy may appear tantalizing, the reality underscores the multifaceted utility of debt within the economic ecosystem. The concept of national debt. The national debt is not merely a numerical abstraction. It serves as a reflection of the government's fiscal activities, encompassing expenditures, investments, and debt servicing obligations. Contrary to popular misconception, the national debt is not inherently detrimental. Rather, it fulfills various functions essential for economic stability and growth. Emergency funds and investments. One of the primary functions of debt is to serve as a financial cushion during periods of economic turmoil or unforeseen crises. Whether mobilizing resources to combat natural disasters or mitigating the adverse impacts of economic downturns, debt facilitates the government's ability to respond swiftly and decisively to emergent challenges. Investment in future prosperity. Additionally, debt enables governments to make strategic investments in infrastructure, education, and technological innovation, laying the foundation for sustainable economic growth and prosperity. By leveraging debt to finance long-term projects with enduring societal benefits, governments can stimulate economic activity, enhance productivity, and foster innovation across various sectors. Debt sustainability and fiscal responsibility. However, the sustainability of debt hinges on a delicate equilibrium between economic growth, interest rates, and prudent fiscal management. A critical consideration lies in ensuring that the growth rate of the economy surpasses the interest rate on government borrowing, thereby averting the specter of unsustainable debt accumulation. Political implications and policy imperatives. While the concept of debt may evoke polarizing debates within political arenas, the imperative for bipartisan cooperation and prudent fiscal governance remains paramount. As stewards of the nation's economic future, policymakers must navigate the complex terrain of debt management with foresight, pragmatism, and a steadfast commitment to safeguarding the interests of both current and future generations. Taming the inflation beast. Now, let's address the elephant in the room: inflation. Remember those days of ridiculously expensive groceries? While inflation has thankfully cooled down compared to its peak in early 2022, it's still a concern. As of December 2023, inflation sits at around 2.6%, which is still above the Federal Reserve's target of 2%. The Federal Reserve, America's central bank, is acting by raising interest rates. This aims to slow down borrowing and spending, ultimately taming inflation. However, raising rates can also dampen economic growth, so it's a delicate balancing act. Debt to GDP ratio and economic indicators. Amidst the cacophony of economic metrics and indicators, one figure stands out as a bellwether of a nation's fiscal health: the debt to GDP ratio. This pivotal ratio serves as a barometer of the country's ability to service its debt obligations relative to the size of its economy, offering insights into its long-term fiscal sustainability and resilience. Understanding debt to GDP ratio. The debt to GDP ratio, often regarded as a fundamental gauge of fiscal prudence, quantifies the proportion of a country's total debt relative to its gross domestic product, GDP. By juxtaposing the magnitude of debt against the economic output generated within a given period, this ratio provides a comprehensive snapshot of the country's fiscal condition. Interpreting debt dynamics. A high debt to GDP ratio may signal potential risks and vulnerabilities, indicating an increased reliance on debt financing relative to the overall economic output. Conversely, a lower ratio suggests a healthier balance between debt obligations and economic productivity, bolstering investor confidence and fostering long-term economic stability. Debt, sustainability, and economic growth. The sustainability of the debt to GDP ratio hinges on several key determinants, including the trajectory of economic growth, inflationary pressures, and interest rate dynamics. While moderate levels of debt can stimulate economic activity and investment, excessive debt accumulation may pose systemic risks and impede long-term growth prospects. Financial instruments. Within the labyrinthine realm of government finance, public debt emerges as a cornerstone of fiscal policy, facilitating the efficient allocation of resources and underpinning the functioning of financial markets. From treasury bonds to government securities, these financial instruments play a pivotal role in shaping the country's borrowing profile and debt management strategies. Impact on financial markets. The issuance and trading of treasury securities exert profound influences on financial markets, shaping interest rates, yield curves, and investor sentiment. As benchmark assets renowned for their safety and liquidity, treasury bonds serve as pivotal reference points for pricing other financial instruments and assessing overall market conditions. Debt management strategies. Effective debt management entails a judicious blend of issuance strategies, maturity profiles, and refinancing tactics aimed at optimizing borrowing costs, managing liquidity, and mitigating refinancing risks. By adhering to sound debt management principles and prudent risk management practices, governments can navigate the complexities of debt markets with resilience and foresight. Misconceptions and realities of national debt. Despite its pivotal role in shaping economic policies and financial markets, the national debt often becomes ensnared in misconceptions and misinterpretations, perpetuating myths and fallacies that obscure its nuanced dynamics and implications. Let's debunk some of the most prevalent misconceptions surrounding the national debt and unravel the realities that underpin its significance. In conclusion, the current economic situation in the United States is characterized by a mix of optimism and caution. While there are reasons to be hopeful about the prospects for continued growth, there are also significant challenges that must be addressed. By staying informed and engaged, we can all play a role in shaping the future of the U.S. economy. We'd love to hear your thoughts on the current economic landscape. Do you believe that the current growth momentum can be sustained? What do you see as the biggest challenges facing the U.S. economy in the years ahead? Let us know in the comments below, and don't forget to like, subscribe, and hit the notification bell to stay updated on all of our latest content. Thank you for watching, and we'll see you next time on Live Economics News.